Hi everyone, it's Stuart here. We're live on Facebook, hopefully, and YouTube, and also on our weekly webinar for some live analysis today. So I hope you're all well. I hope you can all hear me loud and clear. Those of you on the webinar, if you could just say yes, you can hear me. That's always quite reassuring. Jeffrey, Elvis. Robinson, anybody want to say you can hear me? I'd appreciate that, guys. So it's all about your session today, guys. It's about live analysis. So anything you want to talk about, please stick it in the question box or on the chat box if you're on YouTube and Facebook live. That'd be great, and we can move forward. I'm just going to run through some key events over the next couple of weeks. Obviously, we've got PPI today and CPI tomorrow. Kenneth, thank you very much. Arura, hello, my friend. How are you? Hope you're staying well. All the best to your friends and colleagues back in Iran. So where am I? Yeah, it was guys here. Okay, so hopefully my colleagues on GoToWebinar can hear me as well. It's a bit more delayed than normal. So let's get going. It's a webinar, so I need to run through our disclaimer before we get going. So material here is provided as a general marketing communication for information purposes. Does not constitute independent investment research, and nothing in this communication contained should be considered as containing investment advice or an investment recommendation for the solicitation or purpose of buying, selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing the indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in Forex and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. And finally, this communication does not be further distributed without our prior written permission. But those of you on GoToWebinar have got the copy of this PDF. If others want a copy of the PDF, Kenneth and others, please let me know. Okay, so let's get going. That's my ugly mug. Some of you can see me, some of you can't. That was obviously taken in this studio with my best suit on and tie on at the time. My background basically is in the City of London. I've done lots of other jobs. I've run my own consultancy. I was actually a school teacher for a few years, part-time school teacher. And, I've been investing and trading for many years. My approach is very much, if it's probable, do it, keep it simple, and look at multiple time frames. But principally, trading and investing to a lesser extent, to be honest, but trading certainly is a mind game. It's a mindset thing. You've got to understand that as you're trading, you might take hundreds, thousands, tens of thousands of trades if you're in the market long enough, and you will lose a lot of them. Okay, it's just a matter of getting your head around that and understanding that it's a percentages game, it's a probability game, and think of it not in a game, but it's very much as a business. Okay, it's a business because it's your hard-earned cash that you're trading and dealing with. So markets are volatile. Markets go up, they go down, they go sideways. That's all they do, and you're just trying to take a little bit of profit out of it, a few pips here, a few pips there, and live to fight another day. So more on that in my risk management webinars. I can talk until the cows come home, as we say in England, about risk management. And but have a look at those webinars. Today, it's all about you guys and what you want to have a look at. Mohammed's already asked, is gold going to 1,700? Well, we'll see, Mohammed. We'll have a look at that in a minute. What do we think about the news coming out of the UK? Asks Alex, it's dreadful. Political suicide by the current, for what it's worth, my own comments on that. Massive U-turns already. More U-turns are going to happen if mistrust is going to stay in power for any length of time at all. It's looking very, very, very doom and gloomy. And especially for people of my age, unfortunately, the pension industry in the UK is under massive stress. The long end of the gilt curve is just disastrous at the moment. So, it's not great at all. But we'll come back to those in a minute, Alex, my friend. Good. We'll come back to your question about gold as well, Mohammed, in a minute. Let me just run through some of these slides first. So we're going to look at, obviously, the key fundamentals of this week. Obviously, today is the most important, or not the most important, but the first key event of the week, which is really not necessarily the Forex, the FOMC minutes here. Actually, for me, it's not even on here as a high impact event. But the key event from yesterday was Governor Bailey's announcement that the bond purchasing program that the Bank of England had announced earlier in the week was going to actually end on Friday. There's lots of gossip during the day yesterday that it was going to be extended to the end of October, which is when the current chancellor, and I say the current chancellor because I'm not quite sure how long he's going to be in post for, has got his economic statement. The bank, Bailey denied that last night. He said it's good, the ending, it will end on Friday, and the pensions industry needs to find billions of pounds worth of steady funds. The issue with the UK with pension funds is that they invest for the long term. So the safest thing to invest in is government debt, government long-term dated debt. So it's the 30-year and the 20-year yield on government debt has been hit very significantly. Those long-term investments have been hit significantly. So the pension funds, when they're paying out to pensioners that have guaranteed pensions, that's where all the fuss happened last month, at the 25th, when the Chancellor came up with this fiscal spending and cutting taxes, as Miss Truss had said in her election, to be Tory leader and therefore Prime Minister. And it's all sort of, the wheels have really, really come off. And that is leaching out to the rest of the wider market. And it's why we've had this constant, well, not the main reason, but it's added to the market's belief in the strength of the dollar and the safe havenness of the dollar. So it really is a dollar-driven market, but it's being driven out of the UK, out of London at the moment. So that was the main event of the week. Miss Lagarde's speech later on today is an unexpected change tack. They will be raising rates. It probably will be 75 basis points from the ECB in their next meetings. Where they go from there, probably won't be anything from Miss Lagarde later, but watch that. It's the PPE data, really. It's not actually on this chart here. And at 3:30, an hour and a half, which will be the first sign of the inflation within the US. So PPE at 3:30 today. FOMC minutes tonight can be quite significant. Remember, they're backward looking, but they can be significant if there's a big chat about how hawkish the Fed have been. Obviously, they've been all out in public since the meeting took place and the announcement took place. But the 2nd of November is the next big meeting for the Fed, where they are expected to go another 75 basis points on the back of the strong jobs data we had on Friday. No significant sign of the jobs market cooling. It was very, very tight. Unemployment came down surprisingly to 3.5%. So that's pressure on. European inflation tomorrow from Germany. Obviously, the main event of the week is the CPI data out of the US. The number that markets are really looking at is not this headline number of the 8.3%. Again, it's not actually on here, but the 8.3 coming perhaps down to 8.1%. It's really the core number, where we take out the very volatile, automobile sales. So that's really the data of the week tomorrow. 3:30 tomorrow server time, 15:30, 12:30 GMT. That's could be where we go next. Will we see a cooling of the dollar if the core number comes down? That's really what I'd be looking at. The headline is likely to come down, but if the core comes down, we could see a cooling of this big rally in the dollar we've had, and lots of profit getting taken off the table quite aggressively into the end of the week. So watch CPI tomorrow. PPI is first and less significant today. CPI tomorrow, and then we finish the week with retail sales and the inflation numbers out of China on Friday. Remember, we've had the week's holiday in China. We got Xi Jinping cementing his position over the next few weeks as well for the next 10 years. He's been in power 10 years now, and become increasingly authoritarian in the sense that power's been sort of galvanized around him personally. So see where all that tails off. Obviously, there's been the ramp up in issues around Taiwan, so that obviously all builds into sentiment. Tapalo here in GoToWebinar is asking me, what affects fundamental news? Well, it's the data, and with regard to fundamental news, Apollo, it's political decisions. It's the sort of thing, the announcement from the new Chancellor in the UK has created this big hiccup, not more than a hiccup, this sort of wave of uncertainty within the UK. And the press are having a field day. The Economist today, which is a very staid, right-wing, capital of free market loving weekly publication, The Economist in the UK, called in writing. This is it. They've written this down in writing. Called Liz Truss got the shelf life of a lettuce. Basically, very, very disparaging about her outlook. So fundamental news is created by people, created by politics, created by economic events, created by political events. Thapalo, they happen on the outside. What we've got here on the calendar here, these are economic events. The red ones are the big high impact economic events. So these are the big ones for this week and next week. As we get into the third week of October, remember the clocks go back at the end of October, by the way, guys. This is the first. I'll mention this over the next couple of weeks. But the time changes on the last Sunday of October. So remember, the times will change. We got next week, we have GDP and retail sales from out of China as the main meeting starts. Inflation from the UK. And jobs out of Australia, and rate decision from the People's Bank of China as well. So fairly hefty week next week as well, all about inflation and spending, and that's really what is galvanizing central banks around the world. So there we go. That's the week ahead and last week and this week's news. So it kicks off this afternoon in about an hour and 20 minutes with the PPI data out of the United States. So who was first up with their first request? It was Mohammed here, asking about gold going to 1,700. Let me just answer Jeffrey's question that he's coming in. Please, are these fundamental news from the Forex Factory, or have you another source? Jeffrey, that was from our own calendar on our website. Okay, let me just show you our calendar. Obviously, it's very, very closely related to Forex Factory. Forex Factory, obviously, by its name, focused on Forex initially, but they have different sites now that concentrate on commodities and other commodity assets. So here on our website, under the Tools tab, if you go to Tools here on the main website here, this is the main website, hfm.com. The main Tools website there, you've got the economic calendar, and that's what this is here. So you can set it up however you want it set up. So this is how it comes default. It includes all the countries in the world. So you set up your filters, what the information you want to see. So for me, let me just do this. I'll do this live. I'm interested in these sort of key countries here. So Australia. So, and obviously you can set it up however you want to set it up. United Kingdom, Canada, EU, Germany. I have 6 or 7. I can't remember. Japan, obviously, major economies, and then what you want to see. I want to see all these categories, and I'm really only interested in probably the high, the high and the medium high impact. So you click that, filter results, and then you see it either on a daily basis or by a weekly basis. So these are the today, for instance. I might just do it for you just today. So today's big event was the GDP out of the UK this morning, which missed across the board. Industrial production missed across the board. And we've got, where are we? Again, it's not even a high impact. There we are, PPI data, 7.3% due in about an hour and a half. So interesting to see what Mr. Pill's got to say as well. He's the key, he's the new chief economist at the Bank of England, given what Mr. Bailey had to say yesterday, and the fact he had to wind it back yesterday. So anyway, let's crack on with live analysis, because that's what we're all here for. Hope you got that, Jeffrey, about how to use the economic calendar. So let's have a look at gold for Mohammed. Right, guys, those of you that have not been here before, this is a default setup. Yeah, I don't think you see the black background. I might use the white background, but anybody got any votes? Black background, white background, which would you prefer? I'll stay with this until if somebody wants it changed. The blue line is the 50 period moving average. The gold line is the 200 period moving average. The magenta line is the 21 exponential moving average, and the yellow is the 9 period, and the blue is the 5 period. So this is the gold chart for the 1 hour time frame. It's moving down. Mohammed's question is it high? Gold going up to 1700. Well, 1700, Mohammed, is all the way up there. Not anytime soon by the looks of things, does it? We've rallied a wee bit today into the 50-hour moving average, but we can't break over it. We're sort of over the 21, but it's all flattened out. So we're hanging on to 1680. If we go up to the daily time frame, it's a bit messy on this chart, but 1688, which is where we're stuck at the moment, is a key, or had been a key support area here. See, when we were coming down earlier in the year, this is a key support area that we took a while to break during September. So 1688, this brown line here, I hope you can see it, took a while to come down, and it finally broke, and we went all the way down here to 16. Actually, let's put that on there. We went down this, all the way down here towards the end of September to 1615. So this 1688 proved a bit of a support area, and that's where we're back to now, having rallied at the end of September into 1725. Couldn't hold 1725. It's also where the 50-day moving average was. We rolled over, and we've been down since, and a big down day on Monday for gold as the dollar continued to rally, yields continue to rally. High yields and a high dollar means that the attractiveness of people holding gold diminishes because there's no yield on gold assets. So therefore, the price of gold tends to come down. So technically, rallied up into the 50-day, rejected the 50-day, and now we're back under the 21-day moving average. And here on an end-of-day basis, that was a big short triggered here from a big long just a few days ago. So short here on gold on the end-of-day basis. The September low 1615 zone is key. 1650 is the next area to the downside. We need to break this 1688 area initially, 1680. Sorry, 1665 is where we are. The 200 or the 20-day moving average here, Mohammed, sits around 1685. So we need to break back over that. And then before 1700 became a possible target. So it's possible, but at the moment, the trend here as a 4-hour trader is still down. It's been down here from this big break here on at 4 o'clock, or the conclusion of the 12 o'clock candle here on the 17th of, the 7th of October. So it's been short for a number of days. And the 1-hour trader, as we say, has been short for a while. Big up day yesterday. Bit of volatility yesterday. Looked like it was going to break up, but we immediately broke lower. So, 1660 was tested yesterday. Again, a key support area. On an intraday basis, 1665 was a zone. We breached over that. So today, 1665, 1660, the two support areas. And we need to break over literally where we are now, 1670, if this is going to move up to the upside, Mohammed. That's my thoughts on gold today. If you want a different time frame, Mohammed, please let me know. Lanwell, hi, I just got here. I don't even know what is going on. Can you help me, please, if you don't mind? Lanwell, this is a live analysis webinar. We're on YouTube and Facebook, and here on our GoToWebinar webinar as well. So I've just been talking about the economic calendar for this week and next week. It's basically, if you want an asset to chat about, Lanwell, stick it in the question box, and we'll bring it up on the charts, and we'll talk about it. Okay, or I'll do some analysis of it, and you can tell me what you think of it either way round. Alex asked about the story about sterling. Well, sterling pound. Well, let's just show the my pound charts. Let me just tile window. So these are the pound, the Aussie, against. As you can see, it's under lots of volatility, lots of pressure. The main pair is obviously the cable pair, which is pound against sterling. This is a big daily trend line from all year basically has been going down. That sits at 116.76. We're going to move up. This is the daily time frame. We had a big sell out, hit a new all-time low. I should have actually marked on here. This is an all-time low, 103 against the dollar at the beginning, following the crazy. I'm showing my political colours here. Following the this was the 25th when the mini budget was held. This was the following day, we went all the way down to 103. We rallied back on a combination of the dollar weakening, a bit of a weakening in the dollar, and also a tile back from what the UK Bank did, Bank of England did, and also what the government said they may do. So we went to 115, but since then, the last week has been also off. We've tanked again, but really, if we look at the weekly chart, nothing's really changed. This has taken us all the way back to the beginning of 2022, and it's been down all year, hasn't it? That's the green line is our daily trend line. It's been way under the 20-week moving average here from the break towards the end of February, and dollar's been bid all the way down. So sterling remains very much under pressure, Alex, and there's not no way out, but it's we'll need to see some significant action from the Bank of England, or a turn back again like we had here from the government about what they're doing with their fiscal policy. Fiscal policy is not being accepted by the markets, so sterling remains very much under pressure. Teresa says, I'm a beginner. What's the best pairs to trade? Teresa, there aren't the best pairs to trade. If you're trading Forex, the best trades in that sense will be the ones that have the tightest spreads and the most volatility and the deepest liquidity. And they're the majors. So anything that crosses with the dollar. So euro dollar, this one here, the pound against the dollar, the yen is another key one to trade. Euro pound is euro against the pound is a safer one. It moves around less. It can be quite boring, but it's got very, very spiky over the last few days or few weeks since this crazy fiscal policy was announced by the UK government. So stick to the majors: euro against the dollar, pound against the dollar, yen against the dollar. If you want to break away from the dollar, look at something like the Aussie euro. That trends quite nicely as well. So it depends on how long you want to trade it and how often you want to get in it. Ahmed, is asking which books would you recommend? Well, let me just quickly skate through these are my three. There's lots of great trading books, Ahmed. My three favorite of all time are these three: The Stock Market, The Reminiscences of a Stock Market Operator, Trading in the Zone by Mark Douglas, because it helps you with the mindset, and anything by Jack Schwager and his Market Wizards books. If you're looking to get technical analysis, there's John Murphy's technical analysis book is a really good technical analysis book. But really, if you're brand new to Forex trading, the other book I'd recommend is Anna Cooling's Forex for Beginners. She wrote a few years ago. So, Ahmed, they're the books I'd recommend, my friend. Okay, let me get back to the charts. Right, who was next? What was that? That was euro pound we were looking at. Right. So basically, yes, as you can see, pound is under pressure. Obviously, it's moved very aggressive against the euro as well. Here we were up to 92. Wow, another big rally here. Was that just yesterday? Is this the hourly chart? Yeah, that was yesterday. No, the daily chart. There we go. 92.50 on the towards the end of September. Back down a bit now, but still well above where it's been against the euro. Good afternoon, Naomi. Good afternoon. Anything you want to talk about? Any particular asset, please? That's what we're here for today. It's not just say hello to everybody. Good afternoon. Hi, Jem. I know you speaking to me. Euro dollar is in consolidation phase. Which is your opinion about it? Will go up or down? Well, the dollar is strong. Shah Ahmad, I don't know if you're talking to me or talking to somebody else on here, but let me just show you the. Actually, let's use a white background. Nobody's said. So the euro here, it's trending lower. This is the daily time frame. There's Bollinger Bands squeezing in and moving lower, squeezing in and moving lower, squeezing in and moving lower. So we're down here at 97 at the moment. Ahmed, I don't know what time frame you're asking about. My friend. Yeah, there we go. That was asked for a white background. So here's the white background, guys. So this is the daily, clearly in a downtrend. There's the 50-day moving average. That the midline of the Bollinger Band is the 20-day moving average. So brief burst up here at the beginning of October. Now we're back under it. So we've been in the under half of the Bollinger Band, all year as we saw earlier. There's a 50-day. There's a 200-day. So the trend is to the downside. So that's your daily time frame. So if you're going to go long on the 4-hour or the 1 hour or the 15-minute, just remember you're against the higher time frame trend. 197 is where we trade at the moment. Just put that in there as a chart. Is it that color or is it that color? That purple, I think it is. There we are. 97 is really the round number. There we are. Let's make that. Let's put it in where we've come down to. Make it a line. 97 itself. There we go. As you can see, hopefully you can see on here, that 84. There we go. See this 84 level here? That's going back months and months, or years and years, I should say. But the trend, is very much with the downside here. During September, we breached the key parity level. We went back to test it at the beginning of October, but we're still down here, 300 pips shy of that at the moment at 97. So the trend remains to the downside, Ahmed, my friend. Euro is in consolidation phase. Well, you could argue that maybe here for these last 3 days. So if you come down to your 4-hour, you could argue it's sort of hanging on to the 90s. Let me make that a bit brighter. What was it gone? Don't want that one. I wanted the indicator list. That's the wrong one. Object list, you feel. So make that a bit thicker so you can see it. So again, these round numbers become key. But here you can see here on the 4-hour, Ahmed, you're right. We are consolidating and hanging on to this sort of 97 level. If we ignore the spike up from yesterday, the big move down was here at 97.40. So we'd say we're in like a 40 pip range. But even here on the 4-hour, we're still below the midpoint of the Bollinger Bands. But you can see the Bollinger Bands are flattened out and curved. But we're still flat. The 200, the 50, and the 20, we're still below that. So they're still in alignment. They're just not sloping down. The 50 here needs to turn down if we're going to go down. So we are perhaps consolidating. We go down again to the 1 hour. There's your consolidation much more exaggerated. So you'd look for a break of 97.40, which is where the 4-hour resistance is, and the support at the big round psychological 97 is. So again, a 40 pip range. A break of that, either to the upside or to the downside, will show some direction. Again, probably markets are waiting, certainly on this one at shorter time frames, for the data that's due later on this afternoon in about an hour's time when the PPE data comes out. But remember, markets are very jittery anyway. The political news isn't great. What's going on in Ukraine is tragic, and that's undermining sentiment. We've got missiles being launched into the South China Sea and the Sea of Japan by the North Koreans. So all those things continue to undermine sentiment. The Americans and the Saudis seem to have fallen out over the oil production thing. So, it's not a stable world we're in at the moment. And the whole thing, everything that's going on in London at the moment is continuing to undermine things as well. So, Ahmed, consolidation, you want to wait for the break. It's all about patience and trading the strategy that you're trading on the time frame that works for you. Certainly. Kim, are you using a pivot indicator? There's no pivot indicators on this particular chart. I like pivot points, Kim. It gives you the previous day's action. If you're an intraday trader, try loading the pivot points and the support and resistance areas. They're calculated for you. They provide some good areas of support, good areas of targeting. upside and downside. So yeah, I like trading with pivot points. We've got a whole pivot point strategy, and again, whole webinar on pivot points. So have a look at that, Kim, my friend. Stephen, hello. Check the Nasdaq and the pound. Well, the pound, my friend, is pressured. It's been very volatile the last couple of days. It's ticking up at the moment. It's above its 20-hour moving average and its 50-hour moving average. But the trend is very much to the downside. So if you want to take any long positions here, Stephen, be aware that you're going against the higher time frame trend. Top of the Bollinger Band is coming up here on this 1 hour time frame. It's moving with any news or gossip of news, potential news. Sterling is moving very significantly, and there could be some, obviously, I think about now, Prime Minister's question time starts in the UK, which is, hugely pressured Prime Minister at the moment. So, again, watch your sterling trades with that fundamental news that's going on. But basically, sterling is pressured back to 110, pivoting through 110 here. And under pressure. As far as the Nasdaq's concerned, USA 100, it's another one. Sorry, I've only got this with a black background, I think, on this setup. Yeah, I have, sorry. Again, it's another one that stocks have been pressured. The Nasdaq was down a whole 1% yesterday, Stephen. It was the worst perform of the major three indexes. But as you can see, from this, this is the hourly chart. It's been incredibly volatile, but the bias is to the downside. If you go up to the daily time frame, we've broken the key 12,000 level, and we've broken the key 11,000 level. So on a daily time frame, our low here in June, which is what everybody was talking about, here it was just above 11,000. We've breached that in the last few days. So this is also pressured to the downside. And again, if you'd been trading this on an end of day basis, you would have, initially gone short using this particular crossing strategy. You would have gone short there. You might have closed out here because it's bounced back, but you wouldn't. Your stop loss was up there. You got in. Another entry could have been there. You might have got out there flat, but since then, last big trigger low was the middle of September, and here we are, the middle of October. Nice month run. We haven't gone back over the 21 period. You might have closed out earlier at the beginning of the month. That nice big move down and then short again here earlier in the week. So yeah, 11,000 is key for. Let me move that down to 11,000 itself, the big round number for the Nasdaq. So it's pressured to the downside. Stephen, if you're trading it intraday, obviously remember the market isn't actually open yet. So this is the futures market. Remember Nasdaq 100 CFD. But the trend, is sort of flattening out a wee bit. Our weekly low this week occurred yesterday, just before close, which is always a relatively negative sign. We were up a bit today, so we went to 10,710 yesterday, just before close. But we can't recover the key. Let me put that. Let me make sure that's not that one. That's 11,000. 1, 2, 3. So the key 11,000, it's actually up there, isn't it, somewhere? So we've been under that for a day and a half now, or two full trading days, haven't we? We haven't been over 11,000. So the bias remains to the downside, Stephen, for the Nasdaq. Remember that opens, the cash mark hope doesn't open for 2 hours. Hello, Stephen. Azar, what's your Bollinger Band strategy kindly? Let me go back to Bollinger Band. Bollinger Band, there's all sorts of ways to trade with Bollinger Bands. We've got all sorts of strategies. We use it with a stochastic to give you sort of a reflective move. You can use it like a waterfall strategy. When it touches the outside, it can continue to cascade down. But basically, there's lots of information in the Bollinger Bands. Bollinger Bands can show you trends when they're sort of pointing in a direction. Because this, remember, the midline is the 20-period moving average. So it's a moving average of the price action. And the outer lines, as John Bollinger first designed them, are 2 standard deviations away from the average. So the idea is that they encapsulate 97, 96, 97% of all the price action that occurs within the Bollinger Bands. When we go out of the Bollinger Bands, the argument is, well, it's likely to retrace, but it doesn't always, does it? Here, it broke out of the Bollinger Band quite significantly. It was out there for another, whatever it was, 1 hour, and then it retraced quite aggressively, but then it's continued to move down. It didn't get back to the other side didn't get across the middle to the other side. And as this particular asset, it's been in the underside for most of the time, hasn't it? It's bounced up a wee bit, and now it's sort of hanging around. So here, this particular asset, which happens to be the euro dollar on the 1 hour time frame, as far as the Bollinger Bands are concerned, they're going sideways. There's no direction, so you'd play them as like a mean reverting type tool. So as we talked about earlier, the top here round about 97.40, and the floor here at 97, big round number on this particular asset here, because that's key. There's lots of ways of playing Bollinger Bands, my friend. You can use 3 standard deviations, and when they touch the outside, that is a real extreme. So that can be more of a turning point, or use a 1 standard deviation as well as the 2. And again, there's lots and lots and lots of ways. Watch our webinars on Azea. Watch our webinars on Bollinger Bands. There's about 4 or 5 different ones how to play with Bollinger Bands. Right, my friends over on go to webinar. Eric's saying, hi Stuart, can you please look into gold, possibly with the use of a Fibonacci on a 4 hour and the Nasdaq on the 1 hour time frame? Certainly will, Eric. That's the sort of requests I like, because it's specific to an asset and it's specific to a time frame, and he's asking about the Fibonacci. Okay, so gold on the 4 hour and Nasdaq on the 1 hour, says Eric. So let's have a look. I've got gold here. I should have gold here. Bearing in mind what we said, remember, Eric, gold's in a big downtrend. You can see that clearly here on the 1 hour time frame, but the daily time frame, is clearly moving to the downside. 4 hour time frame. So this is the daily, so that's down. The 4 hour, significantly down from its rejection of 1725. So really, from a Fibonacci point of view, on this particular chart, the last leg, really, the top was there. I need to change the Fibonacci because you can't see that. You can see the top was here at 1725. Our floor has occurred this week around this 1660 level. Let me just change the colours on the Fibonacci levels so you can see them on the black background. I'll make it dark blue and the levels also light blue. Okay, hopefully you can see that. Hopefully you can see the blue lines now on the white background on the fib level. So here, from a fib level point of view, these are our 4 levels. So we're weak, aren't we? We haven't been able to ramp up. We had our move down. We moved up. Really, it's only really at this candle here. You would argue you could put your fib level on here. Obviously, there's another leg here which might come into play. But what's this particular showing us? Well, there's significant resistance there at 1685. And remember what I said earlier about 1688? That's within $3 of that resistance zone, which is where the 50 and the 200-hour moving averages are coalescing around 1690. So 1690, 1688 is a big daily support level from previous. So that's 2 levels, and now our 38.2 fib level. So 1685 is key to this moving up. Before then, though, for that 1685, we here with the Bollinger Band set up on this chart, you'd want to break obviously over into the upper half of the Bollinger Band, which sits at 1678. So you've got resistance at 1678, the 38.2 fib level at 1688, and then this coalescing of the 200 period and 50 period, which is a big fat resistance at 1690. So 3 key resistance to the upside. To the downside, we bounce into. We've got to break 1675 first as well. That's our first minor resistance. But the support here at 1660, it's held for 1, 2, 3, 4, 5, 6, 7, 8 candles, but it's looking quite weak, isn't it? We only have to look a little bit to the left to see. We went all the way down here, didn't we, to 1615? So the bias is really to the downside. So that's how I'd look at that, my friend. So there's a key first resistance there, 60 that fib level and that 20 period moving average on your 4 hour. Then there's that fib level. Then there's that big fat resistance there at 1691, and then there's the beyond that is the top of the Bollinger Band, which sits at 1705 and 17. And and Mohammed asked earlier about the gold, Eric, but that's my analysis of that on the 4 hour. We want to do the same thing with the Nasdaq. Sorry, it's a black chart, this, but again, here, if you go to your 4 hour, where's the leg? Well, again, that's clearly the movement down, isn't it? I'm going to have to, the fibs, I'm going to have to change the fib again. But that's your fib levels. And we've got resistance at the first Fibonacci level from, I'm going to change the colors again. It's different background. Go back to yellow so we can see it. Yellow and levels and yellow. Okay, so close. So there we are. So here for Nasdaq, obviously our first fib level comes below the key 11,000 level here on your 4 hour chart, Eric, here, and it sits around about there at 10,950. I think that's, where's that? Oh, yes. Here, yeah, 10,940 is your key resistance, which is the top of the candle yesterday. So we've had 3 up candles, but very weak compared to the big down candles we had. So again, another one that's really biased to the upside. So you've got resistance, first resistance on the fib level here, 10,940. We've got the big psychological 11,000 level, which happens to coincide with the 21 period moving average as well. And then above that is the 38 at 11,080, and then the 50 and the 61 of this down move sits at 11,190, and 61.8 sits at 11,300. So 11,300 is the key reversal area for this 4 hour chart for your Nasdaq 100 traders. Eric, hope that's answered your question. Who's next? Humphrey saying, please share your top-down multiple analysis procedure. So I use 5, 9, 20, 50, but enter with 5 minutes. Okay, let me do that then, my friend. Let me go back to the profiles. Okay, let's have a look at my default. So let's just use top-down approach, which we all should use, obviously. So this is the 1 hour time frame. So there's lots of lines on here, Humphrey. Just actually, let me just find it. Actually, let me open a new chart for the euro, and I'll put the template on. The one we're talking about is 5. What did you say? 5, 9, 50. Yeah, let's put the 5 and this one. Yeah, this one. Insert. I don't think it's got the 200 on it, has it? Make it 200 on this one. Let me just put the 200 in. That's what you asked for. There we go. Insert. We'll make that blue. I think it should show up medium blue. That show up very well. Let's change the color. Blue. So there's your 200, the 50, and the magenta is 21, the 5 and the 9, and there's the yellow and the blue is what you've asked about, Humphrey. Okay, so that's the let's do it. Okay, so the daily is down, isn't it? 200, 50, 21, 9 and 5. All nicely aligned moving averages. The trend is down. We're sloping down from left to right. We hit a new low on this particular chart yesterday, so that's down. We go down. Let's step down to 4 hour. We had a down, then it rallied up, then we went short here. That would have been short. We're still short on the 4 hour. The 1 hour down, move up, failed rally up as we went over the 50. 200 provided the key resistance, still way from that. Then we've gone back down, and now we're sort of consolidating as far as the euro is concerned. The moving averages are flat. The 50 is providing resistance. So here on an intraday basis, I'd be looking at that area there, which sits at what? That's 97.20. It's the key where the 50-hour moving average sits. So above the round psychological number of 97.97, which is where we sit now, just 8 pips above that. So as we go down the charts, I'd want to put on the round 97 number as well. So 97 is a key area. So that's perhaps a little 1 hour channel here at the right at the bottom of 97. Can you see that purple, guys? Let me change that to yellow. Change that colour, changing all the backgrounds. Make it a bit make it magenta. So there's our 97.97, the round number, just around about there. So that's your channel for your one. So that's what you. So at the moment, ahead of the news, who's asking about this? Ahead of the news, Humphrey. That's what you're looking at. So you go down to your 5-minute time frame. So you'd be looking to try and buy at the bottom here and sell at the top. So you'd have perhaps gone short here as it's ran, because it's going sideways, isn't it? There's no direction in the moving averages really. So we'd have gone short here, and that's gone down and to the bottom of the channel. You might have looked to bounce up off there, but it's capped. So it's really, as a trend follower, it's not doing anything. So stay out of the market. It's not doing anything. The moving averages are flat. They're going sideways. Wait for something to happen. The news at 3:30 maybe something that happens, but that's far too choppy for me to be trading that as a trend follower, as a mean reverter. You know, we've had a top earlier, the bottom earlier, but again here on your 5-minute chart, there's a bit of a bias to the upside. I've got a bit of a wedge forming here from earlier today or whenever that was, sort of through there. It's nothing particular to get too excited about, but that's perhaps your trend line, which we've just broken here. And when we've broken, don't trick with well, it's not complete that. So I mean, you could have it. You could have. Yeah, it's not great to be honest. It's there. It's sort of there. You could even know it. Yeah, it's not. It's not. Yeah, it's biased to the downside, isn't it? So get rid of that. It's sideways action. Nothing's happening on the 5-minute there, but that's your top-down analysis or top-down approach, Humphrey, and you can apply that to any time frame. We've just gone from daily to 4 hour to 1 hour to 5 minutes, and do that obviously from weekly to monthly and what have you. Okay, Benny's asking, can you please show the Aussie on the 4 hour time frame, and also please restate the moving average lines you mentioned earlier, as well as how each assists in identifying patterns, Benny. Moving averages, Benny, are probably the most popular of all technical indicators, and certainly as a trend follower, the ones that you should be looking at. But let's have a look at the Aussie. Do you want the white? Somebody asked about the white background. We didn't do many charts with the white background, did we? Let's do the white background again, just for my eyes more than anything. Is that the right? Isn't the one I was looking at before, was it? Perhaps it is. Let's get rid of that. What was it? It was Aussie, wasn't it? No, it wasn't this chart, because this is very messy, this one. That was live profile. That was the one we were using before, wasn't it? Sorry, Benny, and everybody else. We'll get there. Stephen asked about Nasdaq. Stephen said hello. Bollinger Band answered, and Van saying hello. So, hi, Van May, my friend. Australian dollar is here. And Benny's asking about the 4 hour and restate the moving average. Right, this setup, the white setup, is Bollinger Bands, okay? The blue line is the 50-day moving, or the 50-period moving average. And the brown line, the golden line, is a 200-period moving average. You asked about on 4-hour time frame. So that's the four. If you're trading on the 4-hour time frame, it's important you know what's going on in the higher time frame. So the 4-hour has been, it's down, then it consolidated for a little while, and then it's been down significantly into the end of the 7th and down again today. So if we go up a time frame to the daily, so the daily is clearly in a downtrend, isn't it? Clearly in a downtrend. So any, up trade you want to take on the 4-hour is very much against the higher time frame. But clearly, that's not clearly, but what appears to be happening here is some sort of support forming here at 62.50, basically, isn't it? My green line here is 62.47. So 62.50 is a bit of a support area here on the 4-hour. Again, if this thing is finished moving down, again, you could put a Fibonacci level on here. Oh, no, you can't because it's yellow. I'm going to get rid of that. You could still put Fibonacci level. I'll change the color. Well, so 62.50 is clear support. Current support. I'm saying clear support because we've ran right into it with a big down candle. We rallied up 3 candles positively, but we didn't break the 20 period moving average, the middle of the Bollinger Band. Then we had a big down candle engulfing the previous 2 candles. Look how strong that is. It's a big down candle here, wasn't it? Here. Into the close on the 11th earlier in the week. So that's still and then it's been negative. Can't find a direction. So 62.50 is our support. To go higher on the 4-hour, you'd want to break 63. So it's clear, big, fat, round numbers coming into play here for the Australian dollar. 63.10 is where the 20 period moving average is on this 4-hour chart. 10 pips above 63. And then above that is obviously the high of the candles is the next level, 63.30. And if we don't, it's a bit too early to say that this is a floor, but let's assume it is the floor at the moment. What would the quick Fibonacci tell us? Where's the Fibonacci resistance? This is. I can't see that because it's. No, I keep changing the colours. Oh, dearie me. I do make my life complicated. So we can see that. So our Fibonacci levels here is incorrect. No, I have to get rid of that. I'll check this. I've drawn it wrong. Delete. Close. So our Fibonacci levels from this high up here took us all the way down here to the 62.50 level. And that's there. There you go. See, if you were with me yesterday, we were talking about the magic of Fibonacci. There we go. That 23.6 fitted slapped bang where the 20 period moving average is at 63.010. Okay, that's our top of the candles here at 63.30, and then that's before the next fib level. And the key resistance, the 50 period and the top of the Bollinger Band sits equidistant between the 50 and the 61 fib levels as well. So clearly some significant resistance to the upside if this is going to move higher. The support at 62.40 looks a bit suspect, you'd argue, on that. Okay, so the moving averages here, Benny, are the midline of the Bollinger Band, which is the 20 period. The blue is the 50, and the brown would be the 200. I don't know if it's on there. They're the brown all the way up here, the gold on there, up on there. The other charts we were looking at, sorry, let me just do that for you. The other charts are my default setup. On the black charts, this is a crossing. It's not based on the 1-hour time frame. If you zoom this up, these moving averages is the 21 exponential moving average, 21. The 9 period is the yellow exponential moving average, and the blue is the 5 period exponential moving average. Okay. Kuran, hey, big guy. What about SMC there? Okay, fair comment. Fair cop. Yeah, I don't know. We have had this conversation before, haven't we, my friend? Yeah, smart money is still long the dollar. The smart money might turn around very, very quickly. That's my only caveat on that. Karoom. But at the moment, look at the dollar yen. Here we are, 146.60. Oh my word, this has got even stronger during the day. 146.38 was where we were this morning. I thought that was quite high. Well, it is quite high. 145 was quite high, but look at this. We're now 1, 2, 3.5 days over 145. If we go back to the daily time frame, you can see what a resistance that was to moving higher, this 145 level. Here, the 22nd was when the Bank of Japan had intervened as we spiked to 145.80, and here we are above that level now. So, you would argue that something has to give, but at the moment, the trend is still running, and trends can run and run and run, and some big players are adding to their long yen positions. Lots of profit, lots of pips being banked here. How long the Bank of Japan and the government of Japan are going to let this run for? Because remember, Japan is a huge exporter. So from a smart money point of view, Karam, people are still long the dollar. It's very, very crowded trade, but there's no sign of it leaking or returning or turning on a sixpence at the moment. Dollar remains bid, certainly. There we go. Peter's asking, please use top-down analysis on Swiss yen. I'm going to stay with this black background, Peter, if you don't mind. Swiss yen daily. So what's that? You tell me, Peter. What's going on? What's going on with the Swiss yen? Is that in an uptrend or a downtrend? I know it takes a long time to comment on here, doesn't it? Diana, hello. Hope you're well. Yeah, we talked about the fundamentals earlier, Eric, but I'll come back to it, don't worry. Peter, I think you were here yesterday, weren't you? But yeah, so clearly in an uptrend, isn't it? This is the 21-day moving average. We broke higher very, very significantly. Was the last move up here on the, again, that fateful 22nd of September. Looked like we were moving down, looked like the dollar was getting weaker again, but we broke back over here, back through .98 for Swiss yen trades, and that's our support area here now. So this could, the other key area was this daily high here that took us over 98 to 98.40 from the beginning of September, and we've held that now for 1, 2, 3, 4, 5, 6 days. So we've ran over parity. Again, there's lots of lines on here, so I apologise. Let's open a new. Actually, I'm not going to open a new chart, but file. Let's see if I've got the dollar. Yeah, I've got the dollar. It's on this one. Just for confidence. So this is the. There we are. There's our uptrend. So if you're taking, you're talking about a top-down approach, Peter. So the uptrend is set on the daily. The weekly, for the sake of it, is an up. We're into our 4th, 5th week higher. Parity is sort of around there, isn't it? One just there. We've ran into it this week. Let's put that on as a 1. 0, 0, 0. What time is it? So that's our parity level, which we ran into this week. So that's our weekly up chart. We're in our 4th, 5th week higher. Our daily is, 1, 2, 3, 4, 5 days up. We've cooled the last couple of days as we ran to that key parity level. So that trend is to the upside. So that's up. Weekly's up. Next one down is 4 hour. 4 hour remains looping up. There we go. You can see the clear resistance. First test was here last week towards the end of September towards parity. Loop down. But again, it's another one that's supported there. You can see, your trend line is sort of here, isn't it? It was, whoops. That's badly drawn trend line from this low here. But you can see we're sort of, up trending, wedging, up, down, support, up, under the 20, up. Now it's rolled over a bit, so there may be some, obviously it's clear resistance at 1. The 1 hour, there's that, we just breached it just for a few hours, then it's come down. So we've gone short here yesterday, came back, didn't want to break much higher, then it's gone looping again here. So as far as moving forward from here on a 1 hour basis, yesterday's low at 99.15 is the target to the downside. We couldn't break above that, so some sort of resistance today is there. And then let's just, for the sake of daily trades, let's look at what our fib level. Oh, I've got the wrong colours on. I keep changing backgrounds and I keep changing the fib levels. So from our fib level just from yesterday, for instance, what's that showing us? Oh dear, I keep clicking. Object list is what you want your forward indicator list. Oh, for God's sake. So back to yellow. I wish I hadn't started this fib thing now. I just kept swapping from background to background. I should have stayed on one, shouldn't I? So that's our fib level for yesterday. It's basically how the support and resistance levels are playing out. So key resistance to the retrace yesterday. There we go. As if by magic. 61.8 was hit this morning. Briefly breached it. Got to that 99.90 level. And then we've come back down. So here on the 1 hour time frame, the last trade here on this particular strategy from the rejection of the 61.8 fib from yesterday, clear a resistance area, was a short position here at 8 o'clock this morning, which is still in play. So you'd have gone short there at 99.64. It didn't break above the 9 period there, so that's still moving down to the downside. It still buys to the downside at the moment, dollar against the Swiss franc on a 1 hour time frame. That's a top-down approach, Peter, for you. Who's next? Benny's just, yeah, I've got that, Benny. Diana, hello, how are you? Eric saying, thanks for the analysis, it helps. Can you please touch on the fundamentals joined? But yes, I'll go that. Humphrey, yeah, it definitely is in an uptrend. Diana, hello. Aussie Yen, most risk-sensitive of all the key assets, Aussie Yen. So let's have a look at the file profiles. Hang on a minute. I want to minimize that. So, that's because I'm on this one. So, profiles, default, Aussie Yen. Any particular time frame, Diana? Any particular time frame? Let's have a look at this. So again, another one that's clearly here on the. Let's go back to the daily from the top down. We'd been sort of sideways action during the summer, but we started rallying here during August and September. We topped out at 98.50 at the beginning of September as the weakness in the yen continued. Then we've turned around as things have got a bit more choppy. We got a lift in the safe haven requirements from the yen's point of view. It's obviously hammered against the more safe, if you like, US dollar. But here on an end of day basis, here from the 21st, before the big volatility of the 22nd of September, this would have gone short, and Aussie yen remains short on an end of day basis from 95.45 to where we are now. So there's no reason, no panic to take your trades off. You might have closed out there and got back in again here. This, if you've been following this trend down, it probably depends if you'd moved your stop loss down from there on this big move down. You might have taken out. You could have closed out that day as it's reversed here on the 3rd of October as we've gone back. This is the daily back over the 9 period moving average, but then get short here on the 6th of October, and we've gone continuously down. Well, basically, we're short from 95.45, and that's still to the downside. So if we go down the time frames, Diana, you're saying 4 hour. Jolly's saying Euro Oz on the 1 hour and 4 hour. Okay, Janice, we'll get to yours as well. So here, so that's the daily. It's down, just bear that in mind. So the 4 hour is very much to the downside as well. So again, the 4 hour trader using this strategy would have gone short here on the whatever that is. It's the 12 o'clock to 4 o'clock candle on the 6th of October. And again, another one you've been short ever since. I mean, you could have closed it out there and gone short again here, a bit like we just said before. But it's a trend follower. You would have that would have triggered there. Traders would definitely have added more on the following candle because it's, a big down candle, this one here at 92.90. The initial entry would have been up here on the first break of the moving averages using this strategy at 93.54. And then, went sideways for a bit. Then we went down. Then we legged down again. Then it's turned around, taking you out here. If you've, your stop loss would have been sort of round here, then it would take you out on that candle. Then, if you're aggressive on this trend following Aussie, weaker than this, you could have re-entered again there. And it looks like it might be taking you out for a sort of flat trade here on this candle here if it breaks back over the 9 period. But, it's still way under its 21 moving average, isn't it? So the low, it's pegged and, could be targeted again down here at 91. So 91's been tested from all the way up here at 93.50 when we first got in. So 200 odd pips there, plus from this sideways action. Obviously, these ones would have failed, these chopping round when we're flat, not going. You want direction, you want them sloping. So 4 hour Diana Aussie Yen remains short. I'd say it's flattening out now, though. So not a great deal of direction over the last few days. Again, obviously, the data's coming up in 25 minutes. It might move this. Remember, this is the most risk-sensitive of all the pairs, the Aussie Yen. So anything that worries in the world, tends to get taken out on the Aussie Yen. Okay. Janice is asking about the Euro Oz on the 1 hour and the 4 hour. Have I got Euro Oz here? I don't think I have. Let's have a look at my profiles. Australian dollar. Where's it gone? Where's my Aussie dollar gone? Oh. So, what am I talking about? It's Euro Oz, you fool. Sorry, it's Euro I'm looking for, aren't I? Euro, there it is. We are looking at Euro Australian dollar. It's this one. There it is. There it is. So that's trending higher. Janice is my first comment. It's obviously testing. Interesting. It's testing a key resistance at 150.50 and 155, but it's broke higher here on the 1 hour time frame. So again, that's another one that's trending higher. We had a big positive candle from a down move here earlier today. Big positive. Let's go up to your. Well, let's do this correctly. Let's do it the right way around. So the daily time frame is very much in a very strong uptrend, potentially overstretched uptrend, because here the RSI is at 70, but it's kept going. We've been, we first perked 70, so here at the end of September, but we've kept going, haven't we? So that's getting stretched. The moving averages are nicely aligned. There's a nice speed of them. They're quite steep, but there's a bit of a distance between, so it may be getting overstretched. Sorry, let's zoom that in. What's that? Is that a trend line, that blue line? Monthly trend line, there we are, interestingly. Let me go to the monthly then, that blue line. Can you see the blue line there? It's this down trend line from the beginning of 2020 here for Euro Oz. And here we are, it doesn't happen very often, but super strong last 3 months from this low here in the summer at 145. Big, huge, strong September and a strong November it went. So that's a very significant resistance level. So you as a 4 hour trader, you want to be careful perhaps of this. But at the moment, Janice, that is still trending strongly from a move down here towards the beginning, a failed move lower, but then here on the 4 hour, that triggered long there at 12 o'clock on the 6th of October, went sideways into the end of the week, 6th of October, and now it's burst out. It's broken over this 153.50 level, and we're currently trading at 155.20. So it's broken 155, which it's just taken us above this. Let me change the color of that. Not trend line. I hope you can see that. That's the monthly, not the weekly, but the monthly trend line, and we're above it today. So it's a very strong. I say here on a weekly basis, we broke it a few times, but come back under it. So, be aware. This is the weekly chart. Very strong reaction. It may be, getting a bit stretched. I don't know whether you're in this trade or not, but that's to the upside. Certainly, the 1 hour has been relatively strong. A big strong candle yesterday from a move down yesterday, and it's still long from there. So 155 has been broken, and we're trading at 125. So that still looks relatively strong. RSI here down at the 1 hour time frame is at 60 and still rising. The MACD is flattened out. The signal line's flattened out, but it's still above, significantly above zero line. So there's it's running out of direction. You could see there's a bit of divergence potentially here as it's run through this blue monthly trend line. So be careful of taking out any higher, Janice. But certainly the trend remains to the upside here on those timeframes. That's the 1 hour, and that's the 4 hour you're asking about. As you can see, if you zoom in, it's been trending up, hasn't it? Supported. Again, the 1 hour, that's been trending up from the 6th here over the last few days. So again, I don't know what time frame you're trading at, Janice, but do let me know how you get on. Okay, my friends. Any more comments? Anybody? That our hour is up. We're over 10 minutes. I've got a meeting I need to get off to, so I can't stay any longer today. I'm going to leave you with Gurum's idea about SMC. That's interesting. And finally, Eric was asking about the fundamentals. Remember let me go back to I don't know if I've got the pound here, but pound is very much in play. This is the euro against the pound. Huge rally. Another one. This is the daily euro pound. So from these 83s, 80 levels earlier in the year, it's been a massive rally here during September. The chaos that has ensued from the fundamental this fiscal idea from the new government is just sort of the wheels have certainly come off. Jeffrey, thank you for your kind comments. That's what we're here for. It's all about you these days, guys. Cash along. Good afternoon, my friend. Any chart you want to have a look at? I do need to go in the next 5 minutes, so be quick with any final requests, ladies and gentlemen. Let me just finish my slides. We did this earlier. So tomorrow, we're doing these live analyses every Wednesday. So do join us either here on Facebook here on our GoToWebinar site, or join us on Facebook or our YouTube channels, or indeed our Twitter channels, or any other of our other social media channels. So live analysis, I say every Wednesday. Andrew's going to be doing it next week. Position trading tomorrow, Thursday, with Otto. Andrew's Pitchfork, a channel analysis. Not many people use it, but it's quite powerful. Pitchfork, it's got three, like Pitchfork has 3 prongs. So does the Pitchfork analysis, trend analysis, channel analysis with Andrea next Tuesday. And for the final week of October, we've got price action, swing trading against day trading, and the Arun indicator with the AD indicator as well. It's a nice combination. Arun, it's not freely, I don't think it's freely available on the MT4, MT5 platform, but certainly a nice, simple approach and an alternative strategy for many, the Arun. So thank you for your time, guys. I say I'll leave you with my favorite trading books of all time. Angie's just asked about the euro, dollar. So let's finish with the euro dollar, as we're just about we're 15 minutes away from the news. So do follow me here on our analysis page. Webinars at hfm.com is the quickest way of getting hold of me. Follow me on Facebook, Stuart Cowell. Follow me on Twitter. It's HF_analysis. HF analysis on Twitter as well. But let's finally have a look, finish with the euro for NG. So look, euro here. Let's go back to my default setup. So euro remains pressured. Obviously, the PPI data is the most significant data. It's going to affect the euro today. We've had a weak GDP data out the UK this morning. Really, here's a trend-following trader, Angie. There's nothing going on with sideways action. 97 remains key support. On an intraday basis, if I zoom this up, this is our charts from yesterday. We got a key Fibonacci level sitting just above 97 at 97.07. If we go up to the higher time frame and see where this came from, that's that rally here we had at the end of October. We can see that the green lines here, the Fibonacci level. This was the last leg up, if you like, the last resist bounce. We had a significant bounce from this 95.40 level all the way to parity, which was rejected very significantly. A nice big tweezer top there at parity here, and then it's been down ever since. So tweezer top would have taken you short here on the 5th of October, and you've been short ever since. This crossing EMA strategy would have taken you short the following day on the 6th, and we're still moving down. So your stop loss here would still be up here somewhere. You might have pulled it down here actually above 98 as we're renewing parity. But as far as the intraday market is concerned, which I'm assuming you're more interested in, Benny, that's absolutely fine, my friend. Thank you for your time and being here. Best of luck, and may the pips be with you, my friend. Here, as I say, 4 hour, Angie, we're going sideways. 1 hour, we're very much sideways, waiting for the data to come out in about 15 minutes. So there's nothing happening there for me as a trend following trader. I'd just be watching those levels. 97, that 61 daily Fibonacci level, 97.10, and then today's high has taken us to 97.33. They're the levels to watch. And then if there is a big blowout against the dollar, yesterday's high took us up here to the 50-day Fibonacci level as well at 97.65. So they're the levels to the upside. Below, as you can see, is our support here at 96.70, the low from yesterday. So a break of 97 itself. Today's low is at 96.83, and then yesterday's low at 96.70. They're the three levels to the downside, 3 levels to the upside. You need to be watching, Angie. So that's all for now. I'm going to go and have a drink. And thank you, Benny, I say, for your comments. And wrap this one up for today. So watch obviously always watch the calendar, but today it's the PPI data out of the United States that's coming up in about 15 minutes. Here we are. Here's our calendar for the day. This is what we're looking at. PPI, 7.3%. Remember, PPI is what it says it is, the producer price index. So again, the core, we take out the food and the energy, very, very volatile. And that's what we're looking at. And Mr. Lagarde's got a speech later on as well. That might affect, obviously, the euro. And then the other big event of the day, the FOMC minutes. How hawkish were all the hawks and even the centrists on the bank, the Fed later on tonight. So three big bits of data, potential market moving events. But don't forget either what's going on in London. That's also quite significant as well to markets. The unwinding of the gilt market in the UK, and lots of political pressure for the UK. And speaking of the UK, let's look at sterling. So sterling's rallied over 110 thus far today, but stalled at 110.75 again and come down. So not a lot of action since I've been here with you now. So take care, everyone. All the very best, and thanks for being here. And we'll see you all again soon. All the best, everyone. Bye-bye.